Do you know what the difference between a study and a strategy is? I'm back at Don at stockmarketcaddy.com. Today is February 14th. Happy St. Patrick's Day. The time is 5:40. Let me show you. A study and a proprietary study of ours are these little swing dots, these little swing points. And they mark on a Renko chart the swing highs. And when we're stepping out, the swing highs will get taken out. When we're stepping down, the swing lows get broken. It's a beautiful way to mark price. And in the end, price is usually the final arbiter, not volume, not anything else. It's a beautiful way to follow price. That is just one of our indicators. A strategy, and you can see a little faint line here. When it's blue, by the way, it's profitable. This is a strategy that we call the Doral. And a strategy actually puts you in a trade and takes you out of a trade based on an algorithm, based on technicals, based on a profit target, based on a percent trailing stop, based on multiple profit targets and stops and multiple what we call a chandelier of percent trailing stops, and can be a myriad of things. And you are empowered to run that strategy with today's computers and today's programs, and particularly at TradeStation, which we have no affiliation with TradeStation, but we're just one happy customer. We've been with TradeStation now probably close to 20 years. And I only wish I had gone to them much sooner. But let me show you something on this strategy. By the way, this is our proprietary product on the Russell. This, by the way, is also the Russell 2000 futures contract, and it is here too on a 1, 3, and 5. This is our proprietary study that is running on the TradeStation tool called Radar. This is how much we're up or down at any given time on that particular time frame. The strategy, though, is running on something different. And let me show you the results or the backtest of this study. Over the course of 2 months, this is what we call the equity curve. This is the performance summary. Trading one contract over the last 2 months would have produced approximately $18,000 in profits, a profit factor of 1.82. And you can see we don't have enough time here to go over all of the information, but we do teach our members how to do this. Total number of trades, just 365. Percent profitable, 45%. The average winning trade, 251. The average losing trade, 110. The largest winning trade, 875. The largest losing trade, 2.25. Let's come down. You can see some other criteria. An annual rate of return of 104%. A buy and hold return versus a buy and hold, which would have been just 1.96. You can see the advantages to trading. The trading period, 1 month and 29 days. Time in the market, just about all the time. It's running all the time. Maximum trade drawdown, 2.25. Trade analysis, this incredible. Gives you even more. Average time in trade, 3 hours and 56 minutes. Average time between trades. Average time between trade profit peaks. The number of outliers. Notice they're on the positive side, not on the negative side. Run-ups, run-downs. Winning series. How many times did we get 8 winners in a row? 3. What was the average gain per series on each trade? There it is. How about on the losing side? We had 7 losers in a row 4 times. noteworthy. Each trade loss was approximately $147. We can track the individual trades. We can track the periodical returns. Today, from midnight of last night, it traded 5 times. It won on 60% of the trades and would have produced approximately $425. Doesn't win on every single day, but it does win enough to give us an equity curve similar to this. At least this is what we're shooting for. Now, it is true, what happens in the past may or may not happen in the future. That is very true. Backtests just give us an idea of what a particular strategy might do in the future. We're free. We can let the strategy enter or not enter. We can make decisions based on other criteria to help the strategy. For instance, we traded today this strategy and an alternate strategy on the NASDAQ and used the swing machine to help us manage and to help the strategy capture profits. We did that between 9 a.m. and 12 today in front of our members, and we bookmarked it and showed them each and every trade and the P&L. We had 5 trades. All 5 were winners, and we had a profit of $778. Now, that doesn't mean that's going to happen every single day, but with good risk management, understanding the probabilities, using tools such as strategies, using other tools, mechanical tools, computerized tools at TradeStation, their chart trading tool, we're able to control our losses. By keeping our losses small and taking the chance or the likelihood of getting hit with a negative outlier, if we can take that off the table, which we do, we have a 0 tolerance for negative outliers. Now, people say that, but don't know how to implement it. We do. We use a stop loss on every single trade. The strategies and the models help us know where to place those stops. How is that, you ask? Well, we can come here to the performance report as an example, and we can come here to the trade graphs. We can come here to something called maximum adverse excursion. See all these green winners? They all occurred with little to no drawdown. This is the drawdown. If we put a stop in right in here at about $130, we might lose a few winners, but we get rid of all these losers. It's this sort of information that helps us place where to put our stop. We also have another tool called maximum favorable excursion, and this tells us where we should be placing our profit targets. This is the sort of information that we not only do we provide for our members courtesy of TradeStation, but we teach our private members how to build strategies, how to use strategies, how to run strategies, and then how to use those models in the backtest to monitor and to keep track of your own trading. We even have at TradeStation a product that they provide us called the Walk Forward Optimizer, where we can put that backtest data into a Walk Forward Optimizer, and it basically randomizes the results and shows us just how robust our strategies are. What is the likelihood that a particular strategy on a particular chart will or will not make money before we commit our time and our capital. Tremendously powerful. But you need to remember, though, garbage in, garbage out. If you're interested in this approach to the market, certainly recommend looking at TradeStation, but you don't have to be a member or using TradeStation to take advantage of our education. We are a mentoring site where we teach regular traders, regular folks, how to put the probabilities on their side and how to manage risk using the latest in technology, discipline trading, unemotional trading, day in, day out. If you're getting it done wherever you are, hang in there. But if you're not, and you don't understand what a profit factor is, you might want to check us out. I'm Bagadon, stockmarketcaddy.com. You're welcome to call me anytime, even on the weekends. Phone number 813-758-8263. When you're ready to pull the trigger and get started and get your education underway, I want to be there to take that call, and I'd like to chat with you and answer those questions. Thanks so much.